Good afternoon, dear colleagues. Thank you for accepting our invitation. Today we're publishing the Central Bank regular report on financial stability of 2023. Mr. Galstyan will briefly submit the main provisions, then through Q&A we will carry on. Thank you. Thank you. I will go through the slideshow and then I will answer with pleasure your question. Substance-wise, we'll talk about several important issues. The first is financial system development over the year. The second part will be dedicated to main risks of financial stability. We'll lay down the findings of our stress tests as well as the events that the central bank has undertaken through the year to ensure financial stability. As for the financial system in general, through 2023, every sector of the financial system has recorded growth in asset, and the financial system has ensured a natural course of financial mediation function. The banking assets amounted to predominant majority of the financial system, about 83%. The total of banking assets was 9.2 trillion Armenian drams. Determined by that, in the financial stability report, we predominantly submit the current developments in the banking systems, the potential risks and their stress tests. Over the year, one should mention that there was an increased activity in the lending market. As a result, the rate of growth of loans by the end of the year was about 21%. It's the left axis of the left chart, and on the gray line, the gray columns displayed the increase of the total loans, 5 trillion. The deposit portfolio of the banking system also increased, growth by 9.2%. One should mention that the deposit increase is exclusively determined by the increase of the deposit of residents of Republic of Armenia, which over the year have grown by about 18%. The activity growth in the lending market was observed almost along every dimension of lending. It was equally determined by households and businesses loans. Consumer, agricultural and business loans by the end of the year experienced 20 to 21% increase. Although determined by the baseline effect, the mortgage loans annual growth rate declined somewhat, but it still is maintained at pretty high level. The growth rate was about annually 28%. In the conditions of high economic growth, the increase of lending investments was accompanied by loan portfolio quality increase, and the NPL share continues to remain low from compared to its long-term average value. Over previous year, the returns, if we look at the returns in the banking sector, by the end of 23, it slightly decreased, mostly determined by several banks having to write off major assets. Ceding those assets throughout the year, the indicators of returns of the most banks were relatively stable, and the significant decrease took place in December because of the factor I just mentioned. As opposed to previous year, the contribution to the growth of returns was contributed by the purely interest increase, determined by the relatively high level globally, as well as the increase in dram denomination of the bank's loan portfolios. As for capital adequacy and liquidity indicators, the capital adequacy and the system liquidity indicators over the year maintained within the regulatory minimal requirements, significantly increasing these, which is proof to high capacity of absorbing loss in the banking system. Capital and liquidity position improvement was contributed by the gradual phasing in of regulatory buffer requirement and the banks themselves provisioning much higher reserves than the regulatory requirements. So they not only comply with the law, but quite reasonably, as a result of their policy, have accumulated buffers over the year. If we look at the activity of the lending market, it increased and financial mediation growth contributed to it. Nevertheless, over the recent years, determined by the increased term nature of the loans, there was no increase in the burden of the debt, and the impact of the interest rate on the debt servicing was not significant. If we reflect on the main risks of financial stability, we ourselves and our colleagues have singled out two risks contained in the report. The first is the high geopolitical uncertainty, tensions, and possible escalation risks, not only in this region, but also in the global markets, with respect to which there may be various scenarios materializing. We looked at one scenario in order to gain an understanding of the extent to which the banking sector is ready to withstand with its capital the potential challenges, and the second group pertains to mortgage market and real estate market continual growth in prices. You are aware that we regularly in our communications and releases in the risk section, I single out risk section because there are always interpretations that the central bank projects the fall of prices. No, the central bank does not project it. Within the framework of its risks, it looks at this group of factors as a potential risks and develops its policy, priming the system for the eventuality of those risks materializing, for the system to be ready to neutralize them. So these were the two risks with respect to which we have a presentation on this slide. In 2023, the increase of the volume of new mortgages has maintained, which was accompanied by the continual growth of real estate prices. So we see a certain mutually reinforcing impact of these two indicators. Growth in one results in the growth in the other, which may contain certain risks of overheating of the mortgage market. At the same time, the analysis of microdata of the loan registry demonstrates that the weight of those who have more than one mortgage has increased over 2017-2018. By the end of 2022, you see on the right-hand chart, it's the blue line, those who hold two or more mortgages. One economic agent or one natural person has two or more mortgages. Their weight in the total portfolio amounted to about 14%. Those who have three mortgages, their weight is in the right-hand axis. There are 4% of those in the general population. As already mentioned, the banking system currently is characterized by capital and liquidity adequate buffer reserves. Therefore, for the banking system, the macro stress testing summary results come to attest that even in the most pessimistic scenario, the system is able to absorb the potential losses, maintaining the continuity of financial mediation. Nevertheless, there are increasing uncertainties determined by which the probability of cyclical risks materializing is quite high, and the central bank ascribes importance to Commercial banks, looking at their balance sheets, capital and risk management and shares in a very reasonable manner. Over the year, ancillary to developments in the lending market, the cyclical risks were generally balanced, neither over nor underestimated. The exception is essentially mortgage lending, where the high volume of increase carried over from the last year. Over the year, activity increased also in the market of consumer loans. If you look at the financial cycle index, the group of indicators that conveys signals about the group of indicators, you may see the blue and the red parts there. I do not have a pointer. It's the last charts. The blue is the mortgage and the red is the consumer loans. So the early signals, those two have pretty big weight in those early signals. The value of the index is the aggregate of all indicators. It's a principal component converging everything in one index. If it's above zero, it may indicate that we are in the process of certain risks. Over preceding years, we've had years or we had cycles when the loan to GDP ratio, the loans increased faster than the GDP. That's no longer an issue. The two issues that we pay attention at this point is the continual growth of mortgage loans, and the second is that most recently the consumer loans also have started to grow. As for the how the central bank addressed those risks, which macroprudential tools were applied in the environment of high geopolitical uncertainty, the central bank ascribing importance to forward-looking approach to risk management over 23 has increased the rate of the anti-cyclical buffer by 0.5 percentage points. It should be 1.4% of the risk-weighted assets. The purpose is to increase the resilience of the banking system and to preclude accumulation of potential risks in the system. This is it in a nutshell, and I'll gladly attempt to answer your questions. Golos. Mr. Galstyan, the question pertains to deposits. You mentioned 18% increase. That's pretty high. What's the driving factor of this high indicator? And did the investments, let's say shares by the population, increase commensurately or not? Let me make a correction. It's 9.2% growth over the years in deposits. It was only the resident deposits. Non-resident part has a certain decline. I'll ask our colleagues to look at the development on bonds and report to you shortly. We, annually there is always a trend to increase along those two pension funds. The managers of two pension funds manage about 1 trillion. That is 2.3 billion equivalent in US. The issued securities, 18% increase in investing in securities over the year. Arca. Mr. Galstyan, NPL, what's the share of NPL? And in terms of money transfers, according to the most recent report, there is a decline in remittances. How does the central banking explain that, and is it factored into the risks posed to financial stability? As for the first question, the second chart, the right-hand chart of this slide displays the red line. It's below 4%. The non-performing loans weight. During crisis, we had pretty high indicators. In 2015, it was about 12%. In 2020, in the COVID period, it was about 10%. At this point in time, it's below 4%. As for your next question, I'll attempt at a macroeconomic viewpoint. For years on end, we have witnessed a trend in the Republic of Armenia. International remittances is something that the economy tries to distance itself from. So the weight of this factor in the GDP has significantly shifted. A decade or more ago, we had about 15% in the GDP of remittances, whereas now it's a single-digit value, and there are several factors contributing. I believe one such factor is the geopolitical developments. For us, the traditional labor migration destination used to be the Russian Federation, and the proportion was about 80-20 over years between Russia originating and other countries' remittances. As a result of events taking place in Russia, there is a certain impact on this. The second factor that may affect this is the Armenian dram denominated wages and Russian ruble denominated wages. Differential significantly decreasing. A person employed in construction, whether he might emigrates to Russia or does it in Armenia, doesn't make much of a difference, which has decreased. So the temptation and attraction of becoming labor migrants in Russia has significantly decreased for our compatriots. And there is a third factor determined by Russian-Ukrainian conflict, caused major flows of incoming funds. Statistically classifying whether it's a remittance or just a transfer would be quite difficult. So the peaks we had observed in 2022 have been overcome to a certain extent, and what we have now is the natural situation to which we're pretty close. No mic is used. If I'm not mistaken, we're talking about 8% in the GDP. We could report a more accurate number. The last I recall is about 8%. The GDP is a clearly defined indicator, denominator, but since there is some noise in the top part, re-export and other flows, there is a certain difficulty in statistically making it more accurate, which is why it's a give or take. Sputnik. Several questions about the mortgage loan derived. The floating exchange rate loans, will they constitute a significant risk? In the last year's report, they amounted to 1/3 of the total volume of loans, and there was a significant consideration. The borrowers, having in mind the fact that they will take advantage of the return of the withholding tax, did not adequately evaluate the volatility of the exchange rate and may have taken wrong decisions. Let me break it down into several components, the question, to make it more digestible. One of our charts pertained to loan servicing by households. The metrics that are here essentially do not indicate that the loan burden has increased on the household. There is an increase in income, which is quite adequately good and allows to seamlessly service the loans. That's for starters. And secondly, About interest rate, you may remember that the refinancing rate was significantly increased by central bank from 4.25 to 10.75, 6.5% increase. And the mortgage didn't get as expensive. It only increased by 1.5 and 2% with a certain time lag. As a result, the burden that may have befallen on the households as a result of reasonable policy of the banks was mitigated and was much smoother and didn't materialize. So that burden didn't encumber the households. Let me add one more thing. They keep me asking when will the interest go down since the central bank has already reducing the policy rate. There will be time lag. All other factors equal, if there is no increased tension in geopolitical developments or the risk premium, the consistent, if we may be able to reducing it, the interest rate is not so easy because currently there is discussions that the Fed rate will remain high for quite a long time, and if the global risk-free interest is still high, you cannot indulge in much yourself because there are ancillary risks. So I believe at this point in time the risk is not substantial for the Republic of Armenia, and our households will be able to regularly service their debt. And there is a third factor here: the government proposed projects cover the significant proportion, if not all, of the interest rates, which assumes that most of the beneficiaries of this these programs just service the principal. Are there any new trends of increase or acceleration of real estate prices in the market? We have a major issue with statistics here because the real estate price index does not reflect the reality as assessed by our specialists. Within the recent period, notwithstanding certain continual activity, I believe the level of saturation of the market is pretty high at this point in time. If you talk to professionals in the sector, you may get signals that the market is at a point where there is great uncertainty. The smooth, continuous, linear or non-linear growth trend is no longer there. There is a risk of reversal and uncertainty, which result in the gap being pretty wide in between the sale and purchase price. What about methodology? The professionals also mentioned this. Which methodology do you use in estimating real estate prices? In the cadastre statistics, at least partially, they use the asking price, which is not always the same as the closing price. And there may be a trend of tax evasion in bringing it intentionally down. How do you filter those noises? We look at the de facto price. The only official source is the cadastre committee released statistics, so we base our estimates fully on the cadastre supplied de facto information. There is no other source that we use. Whatever estimates we come up with, we call it the factual price and compare it with the de facto one. As to the extent to which, as Mr. Galstyan mentioned, it reflects the reality, that's another issue altogether. Public. Mr. Galstyan, you mentioned increased returns in the banking sector. What about absolute numbers? Hold on. 170 billion, give or take, over the year. Our return on investment is 14.8%, if I'm not mistaken. is the blue line, about 15%. Various circles classify it as windfall. I'm trying not to get involved in that debate because you can debate something that has a clear definition. If if the circles you mentioned could define what windfall is and introduce metrics into it, and we could compare the banking ROI on construction, let's say, or Horeca, or other services, then we could have a logical discourse up to the point. But since for me as an economist, not as a governor of the central bank, it's very difficult to perceive such amorphous notions. Windfall, super profit. Once we get a definition, we could engage in a meaningful discussion. The issue is that the banking system is one of the exceptional sectors that operates at pursuant to highest transparency standard. They are audited by the Big Four and so forth. About the returns in the banking system, we have great accuracy in our perceptions. If the other sectors catch up and are made comparable, then we'll be able to understand whether the system has progressive in profit increase compared to other sector. Over that, the banking sector has been the receiving on the receiving end of tremendous capital, as opposed to the other sectors where the owners' funds are not invested in the business. It's a regulatory requirement that the owners have to invest their own funds in the banking business, which is why the capital is pretty high. Could you reflect on another question? The sovereign debt, as far as I'm aware, it's the highest in the region in the GDP, 50.5% of the GDP. What's the situation and the impact on the economy? It's not me who you have to address this question. It's the Ministry of Finance, and the central bank governor making comments on it would not be appropriate. But if you look at the general numbers, we have a budgetary rule. The budgetary rule assumes a certain type of behavior, and in our observation, the budgetary rule over the last years have been maintained, contributing to macroeconomic stability of the entire country. Are there any estimates about the overheating of the mortgage market in percentage terms? Not the mortgage market. We have two models which are leaning on the indicators and numbers that we claim present a certain statistical problems. But according to these two models, the potential overheating in the pessimistic scenario materializing could reach up to 30%. So in our interventions we try, and in our policy we try to factor that in. Picking up with the same subject, what real risks for a regular citizen or the market could this overheating lead to? The overheating, if if the most pessimistic scenario materializes, the developments may turn out to be quite unpleasant. If you have a house which costs X, it will cost X minus 30. Will you be able to pay back your mortgage? What will happen to the structure of your consumption if you relied on a certain wealth buffer and it went down by 30%? Will it not affect your consumption structure? There are many developments, but at this point in time we're talking about risks more in the perspective of financial stability, not the perspective of households. Mr. Galstyan, about the local currency. It maintains the strong position, although the remittances we just heard went down. We have high economic growth, great volumes of exports, but that's mostly re-exports. So if over time the re-export channels erode and the Armenian dram changes its behavior, from the financial stability viewpoint, will that have an impact if there is some, if the exchange rate goes sharply up, let's say? Everything should be looked at from the perspective of fundamentals. Let me paraphrase it in economic terms. The payment balance, you are saying, has developments which result in increased exports, which in turn results in greater supply of foreign currency over demand. As a result, the dram is either stable or slightly evaluated over export. What if the export reduces, imports increase, and the current account reflected? We will allow, with the free floating exchange rate, for the economy to adjust itself. Thanks to our policy of the recent years, I can tell you that the exchange rate is not an instrument of increasing shocks that people result in withdrawing drum deposits and migrating to dollars. We've been through that, but I think the dialogue between the central bank and the public at large has arrived at a level where there is a certain buffer of trust, and if we say it's not determined by fundamentals, that means it's not determined by fundamentals. What would happen if the drum drastically falls? We will let it devalue. That would be a natural process deriving from fundamentals. As a result, in the next cycle, the locally produced products and goods will become cheaper in dollar terms. The exports will get back, and through the devaluation, this shock will be absorbed. Will it result in substantial financial pressures? I don't believe so, because we've taken recently several decisions. We tried to keep natural persons way away from forex risks. The natural persons resident in Armenia cannot take out mortgages in any other currency than drams, so that cuts one risk channel. And the most recent ruling about the cards, which was somewhat misinterpreted, we took this decision only about credit cards. Debit cards, your own funds on a card account, those cards may be denominated in foreign currency. The credit card, which our study demonstrates 70% of them were not pursuing the purpose for short-term dollar liquidity. About 70% of these were collateralized loans. A vehicle or a house, it was a camouflaged consumer loan which was servicing. So we have recalled these. As a result, consumer loans for households are exclusively in drams, mortgages are exclusively in drams. And the businesses, economic agents who must be able to manage their forex risks, the financial system allows them now to look at derivatives, and we will gradually phase in the solution to dollarization. So the 18% increase in the resident deposits, does it contain dollar denominated deposits? About natural persons, both the term dram denominated deposits decreased by 25.2%. It's at fixed rate, so it's slightly higher. And then foreign currency, 4% natural persons deposits have increased. So we can assume that people have increased trust in the drums nowadays. Thank you. What changes have you observed in the country's risk premium? In 22, most of the year progressed by the optimistic scenario. Overall, in developing countries and in particular in Armenia, did you observe a decreased risk premium? Then it went if the Fed rate stays put within foreseeable future, will it reflect on on Armenia's risk premium being higher? That's the monetary. We've agreed not to ask monetary questions. We have a standalone chart there of the risk premium. If I'm not mistaken, our last observations during the last cycle, it was about 300 base points. The risk premium, we had a peak September last year, determined by the Artsakh events in 23, which deviated us from the total trajectory of developing country. Then it went back to normal. So it's 3 percentage points or 300 base points risk premium, if I'm not mistaken. On a macro level, the revenues the banks get from increased mortgage and consumer lending, did it prevail over the losses that they had in writing off the Artsakh loans? In the general system, the answer is yes. This chart is, the red line is net interest returns in 23 over 22, when the non-interest income prevailed. The gray was higher than the red. This year the red line is higher than the gray. The banks are on a traditional trajectory. For the system, the answer is yes. For individual banks, there is discrepancy. There were idiosyncrasies in exposure level. So in general terms, we can say yes, we have overcome all the difficulties of 2023. What are the leverage trends in the system? I talk too much, so I'll yield the mic. The leverage trends have not changed significantly. There is no growth of leverage, neither there is a decline in the system. It's level. The banks are reasonably managing both the assets in their balance as well as the liabilities, so there is no drastic shifts. About virtual asset management, where do we stand on the central bank? If I'm not mistaken, we have already circulated to the cabinet and thereafter to the National Assembly. We've talked with about every stakeholder, so this draft is ready to get into the bureaucratic tracks. So could you give us a sneak preview? There are two concerns, not exactly concerns, there are two issues that concerns that were voiced by the players involved in it. The first is the traceability. Like the European directives, we will insist that who's on the opposite side of a transaction, that traceability, the travel rule. And the other concern was the capital requirements and cash transactions. There was a question whether they could do the transactions. Can you acquire a crypto asset against cash? We believe not, but then our colleagues from the Interior Ministry submitted to the government their own initiatives. They concurred with us that cash in such relations should be ruled out. So the document you referred to has answers to all of those questions. We reflected our opinion as to how the discussions will proceed. Time will show. That's our position. It's just our position, but it's founded on European directives. About this bill, since it's not published yet on virtual assets management, there was a signal from the sector about the following. If every crypto transaction were to be concluded only through the banking system, that would create inequalities in the market participation, since it's obvious that one major player also has a bank. So the owners of the players in the crypto sphere have commercial banks, among others, so they will be in a more beneficial. Frankly speaking, I failed to understand the question. They may they may get more favorable terms for those transactions since they also own a bank. We will look at it, but I believe in our mandate to protect competition, we will address and resolve the issue through monitoring. Another concern they raised was the increase of transaction to a volume that could make this jurisdiction incompetitive with respect to others. Life will show. I recently took part in several major conferences on the subject, and my impression is the hype is gone over the crypto assets and it's now getting into regular flow. So this class of assets will stay. As for their future as a currency, there is a whole palette of opinions. We'll live and see. Life will show. So there have been jurisdictions which tried to become the forerunners and trailblazers, but they themselves admit that they encountered major risks in this. So we have no fear of falling behind, missing the train. I do not believe in such apocalyptic vision. Our business is to try to create a possibility for our businesses and consumers to invest in such assets and be protected and immune from problems that these assets may contain. I'm agnostic about the asset itself. About the demand for... Can we talk about the demand for bonds? Ask anything. It's another issue whether I'll be able to answer. There was a trend in 22 about the line of T-bills returns, making it more attractive over deposits. Since June 23 we started reducing the rate. Concurrently with such reduction, the returns on T-bills has also decreased. The 10-year T-bill is below 10% in Armenia. Over time, whether there will be an option for natural persons to buy T-bills. That would be very nice, I believe. At this point, it's possible to do it through the bank's platform, but it's not so seamless. Had it become streamlined for natural persons to buy T-bills, that would be nice for people to take advantage of it. But at this point in time, there's a trend of reduced interest. It's good because it decreases the burden of public expenditure. So in conditions of low or absent inflation, the increase in income is higher than it. Could you comment in general terms if you wish? Do you observe an increased price of transactions with Russia, or the foreign partner imposed KYC requirements on these transactions have plateaued and there is no more room for great fluctuations? I looked at the numbers today, for example. In legal persons' accounts, the volatility is quite high. Amounts leave. 2 or 3 major transactions may result in great fluctuations. They go back and forth. As for natural persons, there's no such volatility. The feeling is that whoever is here stays put and manages their assets naturally. As for KYC, I would like to send a signal, and it's something we hear from the banks. This business is going to get increasingly more expensive, the remittances. The rules of the game are persistently getting more stringent. This is the requirements of external partners, it's the requirement of our internal regulation. The banks do their own policy tightening. So we'll live to see what the outcome will be. This business is increasingly becoming more expensive, that's for certain. Even if you look at the staff of the banks, they onboard new specialists, as well as we require international certification for newly onboarded staff. It makes business processes more expensive for them. Refinancing rate. Does the central bank intend to go down? About the mirror cards, it cannot extend over business transactions, so the impact will be limited. Nevertheless, the bank in question, VTB Armenia, did it have issues that may have a systemic fallout effect on the total banking system, or was it contained? Essentially, those who work with mirror cards decided themselves to let go of it because there was a jeopardy of secondary sanctions. As for prevalence of mirror cards, VTB didn't have a major point-of-sale terminals network. They have ATMs which the mirror card holders can still take advantage for cashing out, so it didn't have any systemic. So there was no chain reaction risks that they may have below expected revenue, failed to service loan. No, not in the least. Ask a happy question. The system is good, liquid, services people. Let's finish off on a positive cue. Do you observe a trend that the revenues that have increased in 22 and were not low in 23? Do you observe the banks attempting to invest this in increasing productivity or new gen technologies, AI perhaps, scoring other technologies. I believe and I know that the banks are significantly investing in their human capital. It's partially our requirement from the top of the hierarchy, boards that is. We pursue this and are meticulous about the bank boards being professional, qualified specialists, and we're phasing that in professional, the rest of the professionals, they're onboarding AML, KYC, proficient staff. Technologies are also developing. I believe that as a result of their revenues, there will be significant, within the coming years, qualitative leap in the sector. Thank you for the questions. I don't know whether this question fits in the financial stability domain, maybe indirectly. I've heard this from concern from the participants in the banking system, which is there is a stable trend of brain drain, lack of qualified cadre, especially in the context of this big data. Econometric specialists, mathematicians, economists can easily transition from economics to big data, migrate that is. So within this last 2-3 years, the banks have an issue with attracting qualified workforce. Do you see the same trend? I assume this is always and will always be there. There are several layers to this. Younger, and this is to be welcomed, this is a good development. Young people prefer to set up their own startups rather than be paid for employees upon graduation. So they set up their own businesses, which is a trend. They're good, talented kids, and it's good they opt for it. As for banks, if we look at we give the IT sector tax holidays to increase its weight in the economy, but the banks pay the same profit tax and withholding tax that the real sector companies pay. So the banks are gradually turning into IT companies, but their taxation system is in far worse shape than the IT sector. So attracting quality specialists requires more funding than for IT companies. As for the other factors, we ourselves have this issue, fluctuation. We have 14% turnover of human resources in the central bank. At the same time, we are developing a program. We're just embarking on finishing the first stage. That would be early to report results, but they seem to be substantially good. We call it Young Professional Program, whereupon rather than bringing in colleagues and teaching them classical stuff, we assign them to projects. So during the inception with the central bank, a person does 3 different projects and then makes up his or her mind, talking with various units, makes up his or her mind as to where it would be more exciting for him to work. We had over 300 applications the year before. After a major interview stage, 42 were shortlisted. 32 of them were female, if I'm not mistaken. Some have left, but it's a good program, and we succeeded to augment our talent with new people. So it's not only wages. This is important. Of course, our exit interviews demonstrate that those who leave the central bank at least get twice as much outside, 2 to 3 times, not just 20 or 30%. And that is playing a substantial role. But it's outside of Armenia or out of central bank? It depends. So you still failed to finish off on a nice cue, but still thank you.